Everyone, we have another filing to talk about out of the NYSE-Arca. This is NYSE-Arca 2021-109, and it's to amend the NYSE-Arca equities, fees, and charges. Let's take a look at what this is about. So this was filed January 12th. It's scheduled to be published on the Fed Register tomorrow. 119, it's filed immediate and effective, so it will be implemented tomorrow. Now, the text, the background on this says the exchange operates in a highly competitive market. The Commission has repeatedly expressed its preference for competition over regulatory intervention in determining prices, products, and services in the securities markets. In Regulation NMS, the Commission highlighted the importance of market forces in determining prices and SRO revenues, and also recognized that the current regulation of the market system has been remarkably successful in promoting market competition in its broader forms that are most important to investors and listed companies. While Regulation NMS has enhanced competition, it has also fostered a fragmented market structure, where trading in a single stock can occur across multiple trading centers. When multiple trading centers compete for order flow in the same stock, the Commission has recognized that such competition can lead to the fragmentation of order flow in that stock. Indeed, equity trading is currently dispersed across 16 exchanges, numerous alternative trading systems, and broker-dealer internalizers and wholesalers, all competing for order flow. Based on publicly available information, no single exchange currently has more than 18% market share. Now hold on a second. Remember last year, that was only at 15%. So these filings have been working slowly but surely. So now they're up to 18%. So therefore, no exchange possesses significant pricing power in the execution of equity order flow. More specifically, the exchange currently has less than 12% market share of executed volume of equities trading. This number was only 9% last year. So that's gone up as well. The exchange believes that the ever-shifting market share among the exchanges from month to month demonstrates that market participants can move order flow or discontinue or reduce the use of certain categories of products. While it is not possible to know a firm's reason for shifting order flow, the exchange believes that one such reason is because of fee changes at any of the registered exchanges or non-exchange venues to which a firm routes order flow. With respect to non-marketable order flow that would provide liquidity on an exchange against which market makers can quote, ETP holders can choose from any one of the 16 currently operating registered exchanges to route such order flow. Accordingly, competitive forces constrain exchange transaction fees that relate to orders that would provide liquidity on an exchange. So the proposed rule change, the exchange proposes to adopt an alternative requirement to qualify for Tape B Tier 3 credit. As proposed, an ETP holder could qualify for the Tape B Tier 3 credit of 0.0025 per share for adding liquidity in Tape B securities if such ETP holder has adding ADV of Tape B CADV that is equal to at least 0.15% over the ETP holder's April 2020 adding ADV. Oh, look at that. What started in April 2020? SLR. What ended in April 2021? SLR. What started skyrocketing in April 2021? The repo. Anyways, the exchange is not proposing any change to the level of Tape B Tier 3 credits. The proposed rule change to adopt an alternative requirement to qualify for the existing credit is designed to incentivize ETP holders to increase liquidity providing orders in Tape B securities they send to the exchange, which would support the quality of price discovery and liquidity for incoming orders, which is the two whole main reasons this was filed. By the way, Tape B is the regionals. Most of Tape B is on NYSE-Arca, which is who filed this one, though some of it is still on the NYSE market formerly known as Amex. CADV is consolidated average daily volume. ADV is average daily volume. In essence, to support the quality of price discovery in the exchange and provide additional liquidity for incoming orders is the reasoning why this filing was filed.